SoFi earnings are just 3 weeks away, and the market is absolutely losing its mind. We just watched the stock rip higher by 15%, and they get wiped out. Investors are panicking, asking if the 2025 rally is over, or if the $50 mark is still on the table for 2026. But while the retail crowd is staring at the price action, the smart money is staring at one single metric that could make early investors rich. In this video, I'm breaking down why the big banks are playing games with their ratings, while simultaneously loading up on shares. So within this video, we'll be looking at the financial analysis of SoFi ahead of its important Q3 earnings, which I believe is very important for investors, as we'll be seeing a nice increase in the price action. We'll be looking at quantitative KPI trajectories and 2026 projections. So first of all, let's look at the comparison between Q3 of 2024 and Q3 of 2025. Total net revenue came in at a change around 38%, with Q3 revenue coming in at $961 million, close to $1 billion. Net income did also increase 129%. Adjusted EBITDA, or earnings before interest, tax, depreciation, amortization, increased by 49%. Diluted EPS increased by 120%, and tangible book value increased by 157% over 2 years. Now, looking at all these metrics, they're all above 10%, which is what we want to see in a high-tech growth name. Generally, when the revenues and let's say EPS starts to decline and starts to actually grow at a slower pace, like 10%, this is where investors start to sell the stock really aggressively. But as long as SoFi can keep up these outstanding revenue growths above 20 to 30%, which is just phenomenal here as well, like their EBITDA and their EPS grew 120%. That is just amazing. Then I believe that there will be increased upside over the next couple of years on SoFi. As well, we have to consider the rapid expansion of their ecosystem base. Now, we comparing the total members of Q3 of 2025 to the total members of Q3 2024, we saw a 35% increase with 12.6 million total members for Q3. As well, the total products also increased 36%, which is just phenomenal for the company. And the cross-buy rate reached a record 40%, which drove customer acquisition down significantly. Now, if we also transition in towards a deep dive of the core business segments of SoFi, we'll first start off with the lending segment. This was particularly seen with there's a lot of growth, where their LPB organizations rose to $3.4 billion and personal loan records reached $7.5 billion in Q3 of 2025. As well, SoFi is being seen as the AWS of fintech, as it is powering 160 million global accounts via Galileo and Technisys. As well, the financial services, it got transformed from being a loss to a profit engine. Revenue grew 76% to $216 million with a high contribution margin of 54% in Q3. These are outstanding numbers for the company, and I expect these numbers to keep growing over the next couple of quarters. Now let's talk about the reason as to why SoFi sold 8%, and it was because of the public offering. Now, SoFi did finalize a massive equity sale at $27.50 per share. Now, while this is dilutive in the short term for current shareholders, this move does strengthen the balance sheet, it funds M&A, and positions the company for the important S&P 500 inclusion, which is what most investors are waiting for. Now, if we look real quick at the mechanics of the offering, the initial offering size was around $1.5 billion. Offering price, just like I said, $27.50. The final share count was around 57 million shares, completed January 5th. And the lead underwriters were Goldman Sachs, Bank of America, and Citigroup. And the use of the proceeds, like I said, are going to be towards general corporate purposes and capital enhancement, just getting the company ready for the S&P 500 inclusion here. Now, over the past couple of trading sessions from January 5th to January 9th, the stock has been kind of, in a very volatile sense. We did decline 8%, but we are now starting to level off, which is what I really like. And the $27 floor was firmly tested and held, which did indicate institutional support at the offering price. Now, looking at towards the options market for the implied move of January 30th, there is a 12% implied move, and the average is actually around 9.2%. So there is an increase of 3% in the move, but particularly we believe that SoFi will actually increase after the earnings. So what we should be doing is actually be buying some calls here on SoFi. Now, the most important catalyst for 2026 of SoFi would be the S&P 500 inclusion, as this would spark massive institutional buying. As well, agentic AI integration. By moving into the productivity phase, they can do AI-driven fraud detection and credit modeling to further expand their margins. Now, they have regulatory tailwinds. Now, there is the anticipated regulatory reset, which would stimulate loan growth and reduce capital hurdles for national banks. As well, the $1.5 billion capital raise positions SoFi as a potential predator in the fintech consolidation space. So now that we've covered the important fundamental news, let's transition on towards the chart and look at where SoFi has a potential to go over the next couple of trading sessions. Now, beginning with the SoFi daily chart, we can see that the stock is obviously bullish. It's well above our key indicator, our trend algo pro, which indicates that the majority of the time frames here are bullish, except for the 2 hour, which is a little bit of a longer term time frame here. But overall, the stock has performed absolutely amazing ever since the April lows here that we had in 2025 Liberation Day. That was the best moment to buy, obviously, any type of stock. Here they were really cheap. But looking now, SoFi is kind of consolidating around the general zone. I believe the stock is distributing, is kind of digesting the massive gains that we've seen. So we have a resistance level zone here that we've kind of double topped around this. First we met that high in the 29th of October, and then we, dipped below. We found buyers again and did it again on the 12th of November. We just couldn't get above that level. And then we're also between this level here of 24.90. So we have pretty much an $8 range that SoFi has been trading ever since September of 2025. And, this has been driving most investors kind of crazy and a little bit nervous ahead of the key earnings reports. I mean, if you look at the last earnings, they did absolutely well. They beat on their earnings, they beat on their revenue by very good percentages, as we previously covered as well. But there is some nervousness here with investors. We're at these, pretty much tops. We're consolidating. We're not moving. We're not enhancing. And the earnings are coming up, quite fast here, the 30th of January. Now, if we look at this from a technical standpoint, generally what this means here is that we're simply digesting the massive gains that we've had, right? So there's a lot of selling that's occurring right now, but buyers are coming in at these lower levels and becoming more aggressively. And what I really want to reiterate here, just get the average price. What we can do is use this fixed range volume profile and start it from this level, from where we started to consolidate to the current levels, and see that the current point of control here is going to be this zone here. So we'll put it as green. So as long as the, let's say, buyers remain the level above 27.20, then they are in control. If we are below it, then the sellers are in control. But we can see that the majority of the time we've been above this important point of control level here, which tells me, and it gives me conviction, that the buyers have more weight and more interest in this thing than the sellers, as we can see by this point of control level. Also, if we look at the anchored VWAP from this high, we'll mark it as red because the sellers came in aggressively. We are currently, as of today, January 9th, we are above that. The anchored VWAP average price level of these shorts that enter the market and trigger this intense sell-off here actually came in at around a price of 27.60, and currently we are trading at 28.18 here. So what I would like to see over the next couple of sessions here in SoFi, which would be something like this. So maybe we come and then we dip below, catch some people off guard, and then we start to form that higher high and higher low break. And any break above this also general resistance zone would just be phenomenal, and it just would show a new higher high formation, and that does characterize a trend structure. What I see right now is that we're also trying to form that upward trend, right? Because if we look at this low and this low, this is a higher low because buyers came in and we didn't pull back to such deeper levels. We actually found buyers more aggressive here on the pullbacks, increasing their average price entry at around 26.40 and 27.20 here on SoFi. But if this level does clear, we get above the VWAP, we generally tend to see the transition like that, then I do believe that we can go to $32 here on the short term. I would take some profit here generally, and then let the stock continue towards the highs that I have on $38, and then my other price target towards $47.50 here on SoFi. But apart from that, I am bullish. The fundamentals are looking very, very good. The charts, the revenues, EPS, and the trend algorithm pro is detecting that it's bullish. I just expect more bullishness ahead for SoFi. The bottom line is that SoFi is no longer the speculative SPAC it was back in 2020. We're looking at a profitable, capital efficient tech powerhouse that is beating the biggest banks in the world at their own game. While the analysts at Goldman Sachs and BofA try to talk the price down, the actions tell a different story. They know that once the S&P 500 inclusion hits, the floodgates open. So is SoFi a buy at the current levels? Well, based on the shift to a 65% capital light model and the accelerating EPS, I do believe we are just at the starting line of the next leg higher towards $50. But as always, don't just take my word for it. Look at the data, watch the margins, and stay disciplined. If you found value in this breakdown, feel free to subscribe to the channel, give this video a like, and remember, don't let the markets whip you guys out. I'll see you guys on the next one.